very good evening to all. On behalf of NISM and India Bonds, I would like to take this opportunity to welcome you all for today's webinar, which is on the topic Bonds Jargons Simplified. Myself, Amit Sayyed, working with NISM. Along with me, today we have renowned speakers from the industry. As we are running series, so you must be aware till date, Mr. Vishal Goenka, co-founder, India Bonds, and Dr. Kapil Shrimal, Associate Professor at NISM.
Let me welcome you on behalf of India Bonds. Thank you all for joining. It is our effort to build education and awareness in the country about fixed income. And we are very thankful to NISM and Dr. Sharma for spending his time as both institutions believe in building this education and awareness. Today's topic, just some house rules first. We get a lot of questions on when will you get the certificate. You will get it in 3 to 5 days after you've attended this directly from NISM. So please bear with us on that. Today, what we're going to do is cover a lot of the basic jargons in fixed income that people ask about. And after that, the most interesting part is we're going to give you a live demo as to how to buy bonds, talk a little bit about NISM slides. And the most exciting part is the Q&A. At the end, where you can type your questions to us using the Q&A button. We will also run 4 or 5 polls in the middle to keep it interactive, to understand how everyone feels about fixed income or what is their knowledge base around fixed income.
So very good afternoon to everyone. As Vishal ji has said that some technical glitch are there, but yes, first we'll start about what are the bond market or what is the basics of the bonds will be there as a part of the today's session. So we all know that bonds are the fixed income instruments which are available into the market and where one can buy and sell in the primary as well as the secondary market will be there. So let's say about the bond. Bond is having certain basic features when you say about when you want to invest into the bond. Number one is the face value of a bond, especially when you invest in any of the bond, you must know what is the face value of a bond. So generally the face value of a bond is 10,000 rupees, 1 lakh to 10,000 rupees. That depend upon the type of the bond you are investing. But yes, as per the new regulation of the SEBI, it is the minimum investment in the bond is required the 10,000. Number two, that is a relationship between when you invest into the bond, that is a relationship between the investors and the borrowers. So the company generally are the borrower and they are the borrower for the particular amount, and the investors are the retail or the institutional investors like you and me. So we invest into the bond or we just lend money to the company as a part of the loan to the company. Once we lend the money in the form of the company will issue a bond to us, then the company is liable to pay the coupon. That coupon is known as the interest. So every year, every month, every quarter, or every 6 months, depending upon the nature of a bond, the company will give us a coupon to us. So let's take an example. If you invest 1 lakh rupees on a bond of a company, and on that 1 lakh rupees, company is going to provide you the 10% coupon per annum. So it means approximately 10,000 rupees per annum as an interest that you're going to receive. Number three, at the time of maturity, so bond will have the maturity of life, let's say 10 years is there. So at the time of the maturity, the company will give you the principal amount back. That principal amount is known as the face value. Okay, so that you are going to receive at the time of the maturity also. Another important characteristics of a bond is that once you invest into the bond, you should know what is the rating of a bond, what is the credit rating of a bond. So there are the 2 types of bond. Again, in the later slides, we'll discuss there are the 2 types of bonds. One is investment graded bond. Number 2 is a non-investment graded bond. So any bond which is below BBB minus, they are non-investment graded bonds. So you should know which type of risk you are taking with the bond. And at the last, when we invest into the bond, there is a relationship between the investors and the borrower, that the company is paying you the interest with a frequency plus the maturity amount, and at the time of maturity the principal will be there. So bond is nothing but a simple instrument where company borrow money from the investors and the company will pay the interest to the investors as a part of the loans they have borrowed. So these are the certain basics of the bonds are there. So
yeah, just to add on, it's basically your friend asks you for money and you give him a loan saying, return it after 1 year and pay me 10%. A bond is a listed, regulated instrument, a listed bond. which is the document that you've lent money to that company. That's the simplest way to understand it.
So can we move? Yes. So now when we'll cover simply jargons for the bond market. So number one is the GSEC, or the government securities are the first instrument that we invest into the bond. So these GSECs are the instruments which are issued by the Reserve Bank of India on behalf of Government of India, that we can say. So it can be the two types of government. There can be central government, there can be the state governments. So whenever the state government or central government need a fund to meet the fiscal deficit, or to do the any development into the country or the state related to the infrastructure, so they borrow the fund from the market. Generally, the ideal, when we say about this particular part, GSECs are issued, so they are the 10-year GSEC is ideal. But yes, in Indian market, it is go up to the 40 years as to the life will be there. So it will be the short-term maturity, it will be the long-term maturity also. Okay. And when it's about this GSEC, which are issued by the state central government, so they are known as the dated GSEC will be there. They are managed by the Reserve Bank of India, and the state governments and state development loans are there, where the various state governments, like when we'll say about the Rajasthan or Madhya Pradesh or Punjab, various state governments are there. They generally issue the bond, issued into the bonds with the help of RBI to the market. As per the rating of this particular bond, so they are the souvenir bonds are there. So there is no rating is there. Souvenir bonds are the topmost bond, where the zero default risk is there. So default risk is almost zero when you invest into this particular bond. Yes. But the yield or the coupon that you're going to receive, that is also lesser as compared to the lower graded bonds are there. So anything you want to add, Vishal, on this part?
No, so basically GSEC is called risk-free.
Risk-free.
You know, it's the basic fundamental of bonds. It's even safer than fixed deposits. But this is the time we're going to launch on our first poll to keep the interaction going. How would you rate yourself in bond jargon? So आप अपने आप को अपना सोचिए कि are you well versed, somewhat familiar, or just new to this? So please vote now. Okay, so somewhat familiar is the major ranking from people. New to jargons is the second highest, which is very good, because today's session is about that. Let's move on to the next slide, please. So as we explained, governments, when they issue, they're called GSEC. NCD, or non-convertible debentures, are issued by companies. That's the basic difference. GSEC is issued by governments, and NCDs, or non-convertible, are issued by companies. The companies could be public sector companies. The companies can be the large companies. They could be growth companies. There is usually a confusion. Sir, NCD or bond mein difference kya hai? There is no difference. NCD and bonds, GSEC, they are all the same. Bond or fixed income instrument is the asset class. In India, we've defined it as different ways, which is GSEC is government securities. In US, we call them UST, US Treasury bills. यहाँ पे हम GSEC बोलते हैं. And corporate bonds are called NCDs because they're not convertible into equity or anything else. This is a nomenclature been used for decades. And that's why in India, we say NCDs. These are issued by companies.
So another type of the GSEC is that these are the short-term securities which are issued by the government of India. They are known as the T-bills. Treasury bills are there. Generally, these T-bills are the zero coupon. Zero coupon means because the maturity is very less. So minimum 91 days to maximum 364 days T-bills are issued by the government on behalf by the RBI on behalf of the government. So they generally issued a discount. For example, the face value of this T-bill is 100 rupees. And it's issued for the 91 days or 364 days or 182 days, depending upon the part. So whatever the yield will be there or the coupon will be there, that is discounted. So it might be possible it will issue at, let's say, 96 rupees. So 96 rupees is the issue price, and redeem at par, redeem at 100 rupees. So that 4 rupees will be considered as the interest that company or that government has provided to you. So this is a simple nomenclature of the T-bill will be there. And as a retail investor, yes, you can invest into the T-bills directly with the help of the RBI Retail Direct platform. That is the most important initiative that taken by the Reserve Bank of India. Anything, Vishal, you want to add on this?
No, so T-bill is under 1-year issuance. It does not have a coupon. It is issued as a discount.
Yes.
बस ये कहना चाहूंगा, you can invest in RBI Retail or even through India Bonds.
Yes.
Commercial paper is exactly like T-bill. So if you understand, GSEC is government issued bond, under 1 year is T-bill. NCD is corporate issued bonds. Commercial paper is again under 1 year paper that is issued by companies to raise money as loan. And again, this is issued as a discount to the face value.
Yeah, so as we discussed in the previous webinars also, there is a lots of the confusion between the listed and unlisted bonds are there. So as per the regulation, yes, the listed bonds are the bonds which are listed on the exchange like NSE and BSE. You can buy and sell that particular bonds from the exchanges, and that they're very liquid. But when in the case of the unlisted bond, they're generally buy and sold on the OTC market over the counter, but liquidity issues will be there and regulatory prospects will be also having constraint on that. So and once a retail investor, when you invest into the unlisted bonds, it will be what we can say the liquidity risk, it can be the default risk. So you there is no what we can say regulatory part in this particular unlisted bonds are there. So listed bonds, always it has been suggested when you're investing into the bond or any of the instrument, it should be listed and regulated by the regulatory body.
Just to add, SEBI has issued 2 public caution notices in the last 2 weeks, telling public not to buy unlisted bonds. Unlisted bonds mein kya hai? There is no requirement of the company to tell you about financial results, health, what is happening, or update the investor. It's a simple agreement between you and the company. Listed bonds are the ones which are on platforms, which have the SEBI framework and SEBI protection if things were to go wrong. So unlisted, regulator does not like, protect, and for an investor, it is one of the most dangerous forms of bond investment. Within listed, there are 2 kinds of investments, private placement and public issue. Public issue se main shuru karunga. Everybody knows what a public issue is because people are used to equity. In bonds also, when a company says, I will issue to the public in general, it is called a bond public issue. And we call it bond IPO. IPO is not the right term because it's not the initial public offering, but bond public issue hum isko kehte hain. You can subscribe, click, payment through UPI. The good thing of public issues, the price is uniform. You do not have to worry about price, and you can start from as low as 10,000 rupees. Private placement is listed mein, if a company says, okay, I will only issue to 50 institutional or big investor, they're actually, the process is through the EBP. And usually after the institutions have bought them, they come on platforms like us for people to buy. So listed mein private placement means issued to a select less than 200 investors by regulation. Public issue mein everybody can participate from as little as 10,000 rupees. We'll do a second poll quickly to keep you involved. Which is true about government securities? They are less risky. They always have a fixed coupon. They are issued only to retail investors, or they are traded only in the private market. Please vote. Excellent. More than 75% of people got it right. Dr. Shrimal, आपका lecture अच्छा हो रहा है, which is it is less risky, is absolutely correct. They are issued only in the primary market. They are traded in primary and secondary both, but they are less risky is the point to remember.
Yes.
We will move on to the next jargon, face value. So face value is a term to describe a security's nominal value at the time of issue, या par value है. तो किसी को अगर somebody wants to raise, let's say 1,000 crores, okay, they'll say a bond, I will issue 1,000 crores worth of bonds with a face value of 10,000 rupees, which means you can subscribe to 10,000 rupees denomination, you can subscribe to a bond. This is the term जिसको हम face value, par value और simply at par कहते हैं कि भाई 100 रुपए की चीज issue हुई and it's trading at 100 rupees. This is called face value. Principal amount is also mostly face value. So today is a session about jargon, so you should not confuse. Finance people love to throw jargons to confuse everybody. But principal amount yahi hai ki if you've lent 10,000 rupees bond, that is the principal. And you get interest on that and you get your principal amount back at maturity. So principal amount is the amount of investment as per the face value. Usually it is the same as face value in the primary market.
So now another important jargon, that is the accrued interest is a part. So I heard lots of the people that they said that I buy a bond at XYZ rupees, but when it is settled, some additional amount has been there. Okay, so the most important part, whenever the bond is issued into the market, we have to understand the bond is having a feature of paying a coupon with a frequency, annual frequency or half yearly frequency or the monthly frequency is there. So to make it simplify, what I'll say, if the bond is issued on, let's say, 1st of January, so every 31st of December, company is going to provide you the coupon. Okay. And if the bond is issued and trading into the secondary market, so as a bond holder, I am going to receive a coupon on 31st December, but I'm selling that bond on, let's say, 31st of July into the market, secondary market, and you are a buyer of that particular bond. So what I'm expecting that from 1st January to 31st of July, that interest is accrued to me. So that should be come to me when I'm selling to you into the secondary market. Okay. So that interest is known as accrued interest. So accrued interest is nothing, but whenever a bond is selling into the secondary market, whatever interest is accumulated till date of settlement, that is the accrued interest will be there. So simple, how it is calculated, or whatever the face value will be there, will be multiplied by coupon rate and number of days which are accrued into the market. The simple formula will be there. Example is again given to you. So face value is, let's say, 1,000 rupees, 5% is a coupon, which is semi-annually paying will be to you. So how it is calculated on 30, like let's take an example, last coupon paid date is 30th of June and today is the 15th of August will be there. So calculation will be done. So approximately you can see 6.30 is the accrued interest will be to you. So if the bond is selling into the market at, let's say, 102 rupees, so settlement will be done 102 plus 6.30 will be the settlement price will be there. Settlement price will be higher, generally higher than the market price of a bond.
Absolutely right. Just the logic is, if you're holding the asset, आपके पास asset है, you should be eligible to be paid the accrued interest until that date. So that is really the basic thing.
Yes. Another part, yes, that I told you that the buying and settlement price is there. So there are two types of prices which are generally known into the market. Number one is the clean price. Number two is the dirty price. So simple formula is that the clean price is nothing but the investment of the principal amount or whatever the current market price of a bond will be there. But whenever it is going to settle into the market, so clean price plus accrued interest will be known as the dirty price. So always when the bond is settled into the market, they are settled on the dirty price, and you can see the clean price is the principal amount or the principal price which is showing into the on the bond on the secondary market to you. So very simple part of the clean and dirty price is there.
I'll just add here again, sorry, Kapilji. So if you remember, we said issuance is face value, principal amount is usually 100. Clean price, because of different factors, bonds can trade above 100 or below 100. So that's why you add the investment amount plus the accrued interest, that becomes the dirty price.
Yes.
Very important factor in bond investment is credit ratings. I think everybody knows CIBIL score. When you're taking a loan, you have to know what your CIBIL score is. The higher the CIBIL score, the cheaper the loan you get. Agar aapka CIBIL score is low ya kharab hai, then you'll get more expensive loan, right? So ratings is exactly like that. There are rating agencies which are regulated by SEBI, like CRISIL, ICRA, niche, they are all listed. They analyze the company's balance sheet and give them credit rating, which is a sign of their strength. Obviously, green to red. Red doesn't mean very extreme danger. I mean, triple B minus, I will say, is a little risky for first-time or retail investors. But AAA means usually public sectors or some of the private companies is the highest rating. Highest rating means high safety. High safety means lower return or lower yield. Simple logic. So when you are thinking of investing in a bond, you should think why some bonds are at 7%, some are at 12%, because the credit rating or the riskiness is different. So you should invest according to your own risk appetite. Credit ratings are very, very important for the common person who can't analyze balance sheet as the first test. It is not the only test, but as a first test. Remember, all bonds carry a risk. Nothing is assured, guaranteed in this life, and neither is a bond investment. So you have to do your own analysis. Maturity. Now, lot of people ask ये maturity क्या होती है? It's simple. If I've taken a bond which says if the company raises money for 3 years, let's say today on 11th December, then the maturity date of that bond will be 11 December 2027 in 3 years time. Now, if you buy a bond after 6 months, you still will have the same maturity date. So you're buying a 2.5-year bond. So maturity date is where the borrower says, I will pay you back your principal amount. If I have raised 1,000 crore worth of bonds, I'll repay to all the investors that 1,000 crores. Isme there are two types usually. A bullet maturity means exactly on that date, 11 December 27, you will get in one bullet, one shot में आपको आपका पैसा principal वापस मिलेगा. A staggered maturity sometimes people do, which is good for investor and sometimes for companies. They say, my bond is 5 years, but I will start repayment, let's say after 4 years every quarter. So 4.25 years, you'll get 25% of the money. 4.5 years, you'll get 25% of the money. So it staggers this redemption. So that is staggered maturity or redemption for you. Can we run our next poll, please, to keep our audience engaged? Which of these factors directly affect a bond's price? Coupon rate, interest rate, maturity, or all of the above? Again, excellent. 85% answered right. All of the above. Remember, coupon rate is fixed at the time of the issuance. Because of interest rate, coupon, the price can move, and obviously because of maturity, price can move. So all of these things are very, very important. Our next jargon to simplify, a lot of questions have come. We have received over 100 to 150 questions before this thing. Everyone wants to know, Dr. Shrimal, coupon and yield to maturity mein difference kya hai? What is the difference? Yeah.
Okay, so simple example, as I told you earlier also with the first slide, that whenever the bond is issued into the market, the coupon rate is fixed. The coupon rate is fixed. That is a part. So coupon is the annual or quarterly or half-yearly interest that company is going to provide to you. So that is a coupon rate. Okay. And whenever the coupon is there, so it is provided as a percentage of face value to you. When you hold this bond till maturity, whatever coupon is received by you from the company, it is an assumption that you are reinvesting that coupon into the same market rate, and overall value of that bond will be discounted by the rate. The discounting rate is YTM, yield to maturity. The discounting rate is yield to maturity. Again, to understand with a simple level of example, if in the market, you will see the face value for bond is, let's say, 1,000 rupees, and it is trading in the secondary market more than 1,000 rupees. More than 1,000 rupees. In that case, yield to maturity of a bond will be less than the coupon. And if it is trading, vice versa, so yield to maturity will be the more than the, yield to maturity will be less than the coupon. And again, when we'll say about it is trading less than the 1,000 rupees, then we'll say it is trading at discount where the yield to maturity is higher than the coupon will be there. That is a simple part. So yield to maturity is also known as the discounting rate. And when we'll say about the discounting rate, it is saying that whatever coupon frequency will be there, you have to discount that coupon rate by your required rate of return, or the required rate of return of the market will be there. Coupon will be same for the different type of bonds will be there, but YTM can be different for the each type of bond depending upon the nature of bonds. The discounting rate is generally known as into the secondary market known as to the interest rates can be there, or it is linked with the what we can say the bank rates can be also be linked, or it is also linked with the monetary policy also sometimes at some of the countries. So yield to maturity is nothing but when you are investing into the bond, whatever coupon is going to receive and the maturity amount is going to receive in future, you have to discount by a certain rate. The discount rate is known as a YTM.
Yeah, just adding on, yield to maturity is your total returns. At the issuance time, coupon and the yield to maturity are the same. But as the principal amount can move up and down, so isme, when YTM goes up, price of the bond goes down. When yield goes down, price of the bond goes up. So just remember that correlation. One more Q&A. So just to keep it interactive this time, we've kept a lot of poll to understand our audience better. Let's launch the next one. What happens to yield to maturity if bond price, array, I have just answered this. What happens to yield to maturity if bonds price rise? Yield, YTM increases, YTM decreases, remains the same, or there's no relationship. I must tell my team, you should not put this question. I've just given the answer to make it interactive. Okay, can we end the poll? But that shows great learning. You're absolutely right. If the price increase, YTM decreases. I just explained this with this example. Because you know the asset is more expensive, the return आपके कम आएंगे. The next thing is about interest payment frequency. What does that mean? So coupon is the interest payment you receive from the bond issuer. Now, a lot of times, issuers say, okay, I will pay you interest monthly. Though they say coupon is fixed 9% annually, but I'll pay you monthly. Monthly matlab 9 divided by 12. 75 cents is typically what you will get. Or I'll pay you quarterly, semi-annually, or annually. Quarterly means every quarter, you will get the interest payment divided by 4. Semi-annually means every 6 months. Annually, aapko pata hi hai. Cumulative is, you say, when the issuer says, okay, you give me 10,000 rupees today, after 3 years, I will give you 13,450. So there is no interest payment which comes in the middle, and you get all your payment at the end. A lot of people like monthly and quarterly for regular income because it can, you can match your EMIs. हमारे सबके EMIs monthly होते हैं, quarterly होते हैं. So people like to invest in bonds where they have this additional monthly income to go for as such. Now, last sessions, we got a lot of questions on this topic. It is a little technical, but it is very important to simplify it. So I'll pass it on to Dr. Shrimal. So last bhi, duration क्या होता है bond में? Duration and modified duration. Do not get confused with the formula. I think Dr. Shrimal explained to you.
Yes, so formula पे मैं नहीं जाऊंगा, but yes, simple. The example is that let's take an example. You invested into the primary or secondary market in a bond 1 lakh rupees, and that 1 lakh rupees is going to come with you with certain parts. So one thing is that at the time of maturity, you're going to receive the 1 lakh rupees as a part of the principal. But over the period of time, आपके पास में coupon भी आता है. Okay. So it is nothing but whatever cash outflow you've done, how many years it will take to receive your cash inflow. है ना, आपको कितना साल लगेगा? That is a payback period in simple terminology we can say. So, but here the payback period is discounted payback period. So, at the part of the formula will say it is nothing but the weightage average to the price. Weightage average to the price. So, whatever the time to weightage average will be there, or the various cash flow will divide by the bond price will be there. So, if the bond is having the maturity of 10 years and the duration of a bond is less than 10 years, so remaining period will be considered as the what we can say over and about the investment amount you're getting from the your investment. So the simple terminology, it is nothing but the weightage average to the period to the cash flow. Anything you want to add, sir? So again, the duration will be denominated in the terms of years, but the modified duration is always coming in the terms of percentage. So formula is nothing but the duration divided 1 plus YTM is the formula. So what it simply means, if the duration value is 3 or the modified duration value is 3, so if the market is changed by the 10 basis point or the interest rate is changes by the 10 basis point, the price of the bond will be changed by the 30 basis point will be there, 30% will be there. So it is nothing but it will say the sensitivity of the bond with respect to the interest rate change. So if interest rate changes by the 1%, the bond price will be changed by the 3%. That is an example of the modified duration. And modified duration is derived from the duration. So again, we'll say about the duration. Duration and modified duration are the part of the first derivatives of the derivative problem that we can say. Again, it is technical part, but duration will be nothing but the payback period to you. And based on the payback period, if you divide it by 1 plus YTM, it will give the what is the sensitivity of a bond price with respect to change in the interest rates.
No, absolutely right. Just remember, shorter duration or shorter maturity bonds have less duration or less risky. Longer maturity bonds have a higher duration or more risky. Since bonds are a series of cash flows, this is a mathematical version. इसलिए लोगों ने पूछा था हमें, इसलिए we've put this, that a 3 duration number 3 means for every 1% move in interest rates, bond price principal amount moves by 3%. I think that's a heavy topic. So one more poll to keep our audience engaged, please. Have you ever traded a bond? Very simple. Isme not checking yes and no. There's a huge competition happening. I can see how it is changing. Wow. We have 80% of the people who have never traded or invested in a bond and 20% who have. We welcome both, and I hope today's session is good for both. And next time, the 80% should be a higher number converted into a bond investment. Let's go to the next slide. A term sheet or a KID. So as per regulation, when you go to a bond platform, आपको ये सब दिखता है. A term sheet is nothing but a document that outlines terms and conditions. So what happens is, or a KID, which is key information document. This is downloadable. You can understand and read the company. So company, when they issue a bond, they say certain things, right? So they say my debt to equity ratio will remain like this. My cash to interest payout ratio will remain like this. These are called covenants or rules. So this describes that, and it helps you to understand under what regulation, not regulation, but conditions kya hai, right? For borrowing that. OBPP, this is a frequent term. It's an online bond platform provider. IndiaBonds is one of them. Now, it's a SEBI registered tech-enabled platform. So, whoever is investing in bonds, काफी online platforms पे चर्चा है आजकल. There's a lot of mention of that. OBPPs are supposed to be SEBI registered. They have a license to be a stockbroker, so much like an equity broker. All the regulation, supervision, protection for an investor is through these platforms. Highly encouraged, again, SEBI issued a public caution not to buy investment products from unregulated platforms. जो platform SEBI registered नहीं है, for your own safeguard, safety, this is an educative seminar. Please do not buy from non-regulated, because then SEBI gives you a protection. So make sure the platform is also regulated. We'll give you a quick demo as to how to buy a bond online. We'll use IndiaBonds platform just quickly. Great. So right on the face of it, there are these banners, IFL Home Finance ka bhi, there's a live public issue on and things like that. If you see the offers and categories, today's seminar is also highlighted. These are the various categories. These are new arrivals, high yielding. High yielding means आपको higher yield मिलेगी, which low rating. State guaranteed bonds, which we just launched one, a Telangana one. These are the 10,000 rupee denominated bonds. So these you are buying from the secondary market, right? जैसे today, if you want to buy a Reliance stock, it is secondary because Reliance को IPO के बहुत साल हो गए, right? So these are all secondary bonds. Let's click on one in IndoStar. Obviously, you have to KYC on the platform before that, but just simply buying is like equity. You read everything, go up. You can read everything about the bond. You can see the cash flows. You can download rating report and the information memorandum term sheet, which I told you about. Go back up. Right now, markets are closed. So we have something called AMO. It's a 24/7. You can place your order. We will not put an order, but you can click request order, and through payment gateway, you can make a payment. Very importantly, payment on online bond platform, your money goes directly to the clearing house, national clearing house. At no point does your money touch the platform or the stockbroker. सारे OBPs में ऐसा ही है. It's actually even safer than equity. Equity, you're paying the money to the broker. Here, your money goes to the clearing house. The clearing house will credit the bonds to your account, the demat account, which you have signed up in your KYC. From product side, we can also go to public issue. अभी जैसे हमारा एक live public issue है. I will not go through this process, but you can apply now. You can choose the number of bonds that you want. And the good thing about public issue, as I was saying, is the pricing is uniform. And you can apply from 10,000 rupees. So you don't have to worry, am I getting the right price? I'm getting the wrong price. If you like the company, if you think this suits you, you can go through that. One very interesting product is bond case. If people have heard about small case, a lot of people say, we don't want to buy one bond only. Here you can buy, just view bond cases, please. You can go 5 lakhs ka ya koi bhi amount to 50,000 minimum. You can say, I want various strategies, high yielding, monthly income, short-term bonds. So even for the first time investors, I would say, instead of buying one bond, if you're not sure, you buy a bond case of 3 to 5 bonds. Just click on high yielding. There's some pre-selected bonds. Okay, somehow it's logging us out, but you can come back. So you can choose 5 to 6 pre-selected bonds and do that. Just go to tools quickly. There's a, I will not go in detail. There's a bond directory. You can look details on any bond in the country. There's a bond calculator. जो हम yield की बात कर रहे थे. Let's click on bond calculator. Or let's walk through the portfolio dashboard also. Yeah. So bond calculator. Again, you're logged out somehow. So anyway, you get the idea that you can go to a bond calculator, calculate price and yield. You can also see your entire portfolio dashboard. We have a bond uni there for any terminologies. It's an edtech tool. You can just go to the bond uni. It also has Dr. Shrimal and my past webinars. If you want to see under video section, you can see the earlier topics that we've covered. They're all on our platform and you can use that. Great. We stop sharing now. So that's very simple. We'll go back to our presentation.
So yes, like NISM is also having the initiative with FIMDA, where if you want to learn more detail about the bonds or the fixed income securities, so we have created the series of e-learning videos where you can register and learn by yourself base, and you'll get the jointly certificate of NISM and FIMDA also. These are the 4 certificates currently available on the website of NISM. Then starting with the introduction to the bond market or the bond mathematics or the types of the bond or fixed income securities and interest rate derivatives are the 4 videos that we have created.
Great. That brings us to our Q&A section. No, yeah, our next webinar will be what are corporate bonds? About a month away from now. We are just highlighting to you. So in our effort to have a series of fixed income, please note this. Communication will go out at the right point of time. And now we move on to our Q&A section. There are a lot of live Q&As, but I'll go through the questions which have been sent before. किसी ने लिखा है प्लीज स्पीक इन हिंदी. सर थोड़ा मुश्किल होता है. वी आर अ डाइवर्स कंट्री, लॉट ऑफ लैंग्वेजेस. थोड़ा हम हिंदी करते हैं, थोड़ा इंग्लिश करते हैं, बट प्लीज अपॉलॉजीज. इंग्लिश इज अ मेन बिजनेस लैंग्वेज, हम उसको यूज करते हैं. लॉट ऑफ पीपल फ्रॉम डिफरेंट स्टेट्स एक्चुअली डू नॉट अंडरस्टैंड हिंदी ऑल्सो कभी कभी. तो apologies, but we keep English as a language. Website or resources to further our knowledge. As we showed, Bond Uni is there. NISM efforts are there. You can learn more about that. Lowest value of investments in bonds is 10,000 rupees. Taxes on bonds, मैं ले लेता हूँ Dr. Shrimal. The listed bonds में the interest income is 10% TDS and taxed at your slab rate. But if you make any long-term gains, LTCG on bond investments are only at 12.5% after 1 year. This is unlike debt mutual funds. Relationship between bond yield and interest rate, I think we already spoke about.
Yes.
What is the credit rating? अच्छा हाँ, which bond is reliable? How to know apart from coupon? I think it's credit rating. ये बहुत simple है, तो मैं कर रहा हूँ. Tough वाले आपको दूंगा. I'll give you the tough ones. What is the credit rating and how to choose a bond? Sir, do you want to elaborate? I know we covered it, but again, do you want to elaborate on that?
Yes. So again, credit rating is a part where the creditability of a company to pay your principal and back along with the interest over the period of time. So as we know, higher the credit rating will be good for the investment as a part. If you want to take a risk, definitely you can invest into the lower credit rating where you get the yield more. So as a part of the market concept, higher the return, higher the risk is a part. So if you want to take a higher risk, lower rating will be provided. And yes, Vishal.
Next question, can an NRI invest in bonds? Yes, we've actually on IndiaBonds, we've kind of found a solution. KYC is a longer, थोड़ा सा long process होता है, but you can come sign up, somebody will help you. Procedure is simple. First you have to KYC, you have to have a DMAT account in India, and then you can invest in that. How to check the liquidity of a corporate bond? Just highest credit rating have the highest liquidity. Lower होगा तो आपको return भी ज़्यादा मिल रहा है. You have to give up on liquidity. What are the platforms used for trading? IndiaBonds is one of them. What is the difference between FD and bond, sir? ये आपके लिए.
So FD is not a saving scheme, okay, of a bank, where bond is known as a fixed income security. On FD, again, there is a part, the rate of return or the interest you're getting on FD is very less as compared to the fixed income security market. Sometimes you will get the capital gain also on the fixed income security, but you will not get the capital gain on the FD part is a part. And if you do the higher amount of FD with a bank, so as per the rule of insurance, the maximum cover limit is 5 lakh rupees to you.
Just to say कि FDs and bonds both are good. It depends आपका investment horizon क्या है. If you want a short term to park your money for 6 months, 12 months, you do an FD. Okay. DIGC insurance only for 5 lakhs. But if you want to have a long-term strategy, then bonds can potentially give you capital gain. Sir, there's a question, could not understand modified duration. How a small investor like me should react to my bond holding when the modified duration changes? आपको कुछ करना नहीं है. Doctor,
So,
please
so
explain.
there is saying into the market, if you don't know anything, just sit cool and calm. That is a part. But yes, modified duration is useful when you are a bond trader. When you are trading into the bond for into the secondary market, where the interest rate announcement changes will be there, how it will affect to the portfolio for bonds. So modified duration is affecting that. Let's take an example. If the interest rate is changed by the 10 basis point, as a bond trader, what will affect to your portfolio? To manage your portfolio, you can take a call to buy or sell of a bond into the secondary market. That is a part. But yes, as an investor, retail investor, always no need to worry about that most of the time.
Just basic shorter tenor maturity bonds have less duration, modified duration and risk. Longer have more.
Yes.
There's a couple of India bonds question में ले लेता हूँ. Is platform for investors or advisors? Platform is for investors, sir, directly investors. There is a scheme we have for partners, but we are waiting some SEBI regulation. Some people say how is India bonds better than competition? Sir, आप judge कर लीजिए, but simply है. I think we have some very good prices, very competitive. I think 75 to 80% of the prices is competitive. But we invest in the investor. What do I mean by that? We are doing education webinars आपको समझाने के लिए. We have things like bond calculators, portfolio dashboard, which is usually been available to sophisticated large investors. तो हम simply हमारा formula thought ये है कि education awareness फैलाना है हमें, और कंपेरेटिव प्राइसेस रखने. बॉन्ड कैलकुलेटर दुनिया में, मतलब इंडिया में किसी के पास नहीं है प्लेटफॉर्म पे. सो दोज आर द थिंग्स दैट यू हैव टू थिंक, व्हाट इज योर रिलेशनशिप विद द प्लेटफॉर्म, एंड थ्रू अ कस्टमर सर्विस वी ट्राई टू डू बेटर थिंग. वन अदर क्वेश्चन कि देयर आर सो मेनी एनसीडीज, पर कौन से ऑफर में पता नहीं इंडिया बॉन्ड्स में. सो वी हैव अ डायरेक्टरी ऑफ ऑल द बॉन्ड्स, 20,000 वो इन्फॉर्मेशन के लिए है. From the home page offers and categories, you go to the all segment. About 60 to 80 bonds are live on offer at any point of time. That is the easy way to see. 1 second. The bond we buy is the same as FD, right? It gives quarterly. So FD is also a fixed income instrument, and bond is a fixed income instrument. FD is also available now digitally on our kind of website. So this is for you. How to know 100% safe and secured bond?
So 100% safe and secure bond, again, that you can say 𝐤𝐸𝐥, as of now, India and 𝐤𝐸𝐥 are the 100% safe and secure can be there. But yes, there is an history into the other countries also where 𝐤𝐸𝐥 also become the default are examples. But anything is related to the market, subject to market risk is my answer to you. So no one can guide you what is safe and secure, but as per the currency, so when your bonds are considered to the safe and secure.
One question, what is NSE RFQ? RFQ is a platform created by NSE called Request for Quote. All online platforms have to go via RFQ. RFQ में क्या है कि your money is safe. RFQ settlement mechanism means कि when you are paying for a bond, your money does not go to platform but straight to the National Clearing Exchange, who credits the bond. So RFQ platform use करना online bond platform के लिए mandatory है, and it is in the best interest of the investor. Someone has written just TDS. TDS is a 10% for listed bonds. ये आपके लिए. Why has NISM discontinued FIMDA module exam for fixed income?
So NISM not discontinued the FIMDA module. So NISM has reinvented that module with the e-learning platform. So we have come with the e-learning platform with the FIMDA. So we are not discontinued. We have come with the new avatar of that particular module.
One question, can we mortgage the bonds like FD? Right now in India, 𝐸𝐸𝐥 and T-bills you can. So a lot of, for example, लोग खरीदते 𝐸𝐸𝐥 T-bills to have it as a security collateral to raise funding. You can easily raise funding with a haircut. Equity brokers give you leverage on buying that. Question, how much portfolio one must allocate to bond portfolio? I think overall आपका financial security portfolio में 20%, Kapil ji, please correct me if I'm wrong, but 20% should be in the bond portfolio allocation?
Yes. Minimum, so it should be there.
Is SGB sovereign gold bond closed permanently? Sir, इसका आंसर हमारे पास है नहीं. RBI has it. The country issued SGBs because it was a cheaper form of fundraising, 2.5% में. But given the gold rally, maybe it does not make sense for RBI. So there's no assured guarantee कि issuance आना है. Secondary में, if you buy SGB, please be careful of tax implication of long term. That's not still clear, because usually HTM में your capital gains are tax free. So there's a little gray area. So just be careful about that. It says bond prices are very high. How will individual investor invest? Sir, 10,000 rupees में invest कर सकते हो आप, उससे नीचे है नहीं. If you so I think that should be reasonable. Who receives accrued interest of bonds, buyer or seller? Kapil ji.
So accrued interest of bond at the time of selling, definitely seller is received accrued interest. But yes, whatever the buyer has paid accrued interest to the seller, that is going to be received at the time of the next coupon due date to you. So for example, interest is 100 rupees for the year, and the seller accrued interest till date is 60 rupees. So as a buyer, you have to pay 60 rupees to the seller, but you will receive next in the next coupon 100 rupees to buy
So
the
accrued interest is received by the seller. One question is, can we transfer bonds from DMAT, one DMAT to other DMAT of the person? You have to talk to your DMAT accounts. मुझे पता है आप कर सकते हैं. There are some form to be filled where you can move your securities from one DMAT to the other DMAT. One question is how to maximize bond returns to earn monthly income during retirement. So maybe Kapilji, we can talk about certain bond investment strategies. मतलब एक दो I have in my mind, but why don't I give it to you first? Yeah.
No, definitely. We can plan the sessions also, but yes, as a retirement planning, if you're thinking of, so there are the very good bonds which are available into the market. Those who are providing the monthly coupon to you, so you can park your money. You can create a bond portfolio for yourself, where you can have the monthly interest frequency for the bond portfolio to you.
Two strategies I'll talk about. One is a maturity strategy. It's called a ladder strategy.
Yes.
So you buy a bond portfolio जो 1 साल में mature, 2 साल में, 3 years, 4 years, 5 years. You buy 5 bonds like that. So what happens is, then your interest rate risk is relatively less, because after 1 year, if it goes up and down, you have some maturity, you reinvest that, some maturity, and the coupon keeps coming. That's called the ladder strategy. One we talk about is a barbell strategy. Again, this is not a recommendation. आज educative session है. Barbell strategy में क्या होता है? You buy short end high yielding bonds, 2 years, 3 year maturity, and long end के आप government security safe खरीदते हो. So right now, let's say we are close to or at peak of interest rates. RBI governor just changed also. So if interest rates were to be cut, the long end will help you gain a lot of capital appreciation. The short end will give you the carry. Usko barbell कहते हैं, but we can have a session around that. One question is how to use bonds to adjust volatility of my portfolio.
So yes, you can use a bond because diversification is required. So whenever the market corrections are there on the equity portfolio, you can use that bond to have a benefit of the downfalls of that particular part. So volatility of the entire market can be recovered by the investment into the bond also.
Question one, does unlisted bond also deduct 10%? No, unlisted bond I think has a 25% TDS. Please जरा उसको देखिए. We are not very sure of that, but this is how this is how we look at that. Does bond case assure certain yield or a yield range? See, bond case खाली एक mathematical addition है. अगर मैं 1-1 लाख के 5 bonds खरीद रहा हूँ, I mean I know you are there, but I would love to answer the run the Q&A. काफी हमारा अच्छा interesting. 5-10 minutes extend करेंगे. Bond case is a sum of yields, right? So if you hold the entire portfolio to maturity, it is a precise yield that you will get. Assurance, there's no guarantee, but it is a calculation. Why should someone invest in bond when interest is 10? Mutual fund give interest rate of to 12 to 15%. नहीं sir, no mutual fund gives you interest rate of 12 to 15%. Debt mutual fund 7 से 7.5% देते हैं. Maybe equity funds give you a high return. It's not an interest rate, it is a return. It is susceptible to market risk, like bonds. What to do if I don't get certificate? Sir, you will get the NISM certificate. I know it's very popular. Is DMAT account required for trading bonds? Yes, absolutely. All financial security in this country के लिए आपको DMAT account चाहिए, bonds के लिए भी चाहिए. Can we convert our bonds into liquid cash within hours or days? Kapilji, you attempt first, then I will try.
So yes, you can convert a bond into liquid asset. So once you have a bond, you can definitely sell that bond onto the secondary market, where it can be converted into the liquidity. That is a part of the cash within a T+1 to whatever the period will be there.
Just remember, the most liquid is government security, T-bill and AAA, which has very constant market. If you go to a high yielding, it might take some time on a best effort basis. When will I get my certificate? To remind you, the certificate will be in 3 to 5 days. Amir, please note, कितने हमें follow-ups आते हैं इसके लिए of this thing. Yeah. Impact of reducing CRR on bond market. Very good question. This is also Dr. Bhatt. मैं पूरा नाम नहीं लूंगा. Very good question, sir. Cash reserve ratio actually helps to infuse liquidity. If you remember, there is a deposit problem with the banking system. So CRR technically bond market को नहीं impact करता है, but deposit rates could go down in future, in the near future, because banks get more liquidity. Do bond investment really beat inflation in the long term looking at the Indian economy? Doctor, to you.
When it's about the part, so if you create a portfolio for bond which beat the inflation, yes, it will beat the inflation at some point of time. Definitely, there are the good bonds available into the market, those who provide coupon or the yield higher than the inflation into the market.
Yeah, so typically inflation is running at 5.5%, 6%, and bonds, you can even government bonds are higher at the moment. Absolutely. A question है, RBI allows foreign investment in other equities. Do you allow investment in foreign bonds? इसका कोई provision government ने दिया नहीं है अभी तक. So we do not have that provision as such to invest via IndiaBonds platform also. Maximum amount for purchasing bond limit. Sir, there is no limit on how much you want to buy of a bond. Please call us if you are in that category. We would love our...
So minimum is 10,000.
Minimum, sir, maximum you can buy. Just to tell the market, our audience, the bond market is $2.7 trillion in India, INR denominated है. तो इसका कोई upper cap है नहीं. मतलब ये बहुत बड़ा market है already. People are asking yield to maturity, just simply if you can repeat again, sir.
So yield to maturity, अगर simple term में जो बोलो, it is nothing but the IRR, internal rate of return, कि whatever amount you have invested, at what rate that amount is receiving to you. So that is IRR. It's
a return. When I buy bonds to India, what is the benefit? Should I pay brokerage? On IndiaBonds platform, there is no brokerage to the investor. The benefit, as I said, you have cash flow reminders, cash flow dashboard, bond calculator, और सारे IPOs आपको information बड़ी अच्छी मिलती है. We are almost coming to an end. Sorry, किसी ने लिखा है, please have a vote की next seminar, which language it should be held at. Sir, thank you. We will do that. Again, apologies. We are trying to do this. Someone said no demat required when I buy 𝐤𝐸𝐥𝐥 from retail direct. You are absolutely right. वो SGL format में होता है. If you buy from 𝐤𝐸𝐥𝐥 retail, but usually people who are financial investors like to see all the investment in the demat portfolio, and that's why people have demat. But you are absolutely correct. If you buy through direct retail, you do not have. But it is also very less liquid. Yeah. We are almost coming. Sorry, Amit, just bear with me. Difference between promissory bonds and normal bonds. Sir, ये promissory note हुआ करता था पहले, but everything is bond. Bond is also like a promissory note. It basically says I owe you that money. Does bond give you collateral for trading? FNO, I think most equity brokers do for 𝐸𝐸𝐥 and T-bills. Can I get certificate after the session? No, sir. 3 to 5 days, and NISM will send you. Can I become a partner? Very soon we'll open a partnership program. We are waiting for SEBI approval. Somebody said language. This is not a debate on language. Someone says language should only be English. Sir, मुझे पता नहीं. We'll take a public thing. Can I trade in bond in Zerodha? Sir, मुझे पता नहीं. Go to Zerodha. You'll find out. As of I know, they don't have bonds there. They have demat account there. We have a lot of customers who have demat at Zerodha who trade with us. Sir, how can a student get benefit by investing in bond? Kapil, you want to take? This question आता है कि at what cycle of life you should start investing? Yeah.
So investment life cycle, you start investing, that is good for you. But yes, if you are as a part of the diversification of portfolio at early stage, if you have some risk-free investments also, or the lesser risky investment also in your portfolio, that will be good for you. So investor, definitely as a student, definitely as an investor, it is good to invest into the fixed income.
Yeah, so portfolio diversification, capital preservation, right? Today, if you have 100 rupees, you might buy only equities, 1,000, buy only equities, but when you have 10,000, 20,000, 100, 1 lakh, you want to diversify, right? Bond is a good way to earning regular income for that. Somebody said, please answer my question also. Sorry, आपका question हमें दिखाई नहीं दिया, but we are trying. Amir, please, what is senior secured bond? Very good question. There are bonds which are secured. मतलब कि the issuer says कि भाई, in case something, this is a collateral I have, this is secured. Secured bonds are safer and have lesser yield than unsecured bonds. Senior means कि भाई, if a company goes into bankruptcy, you are the first creditor who's paid below subordinated ones. can customers submit tax exemption form? There is a 15G, 15H forms that you can submit to different companies if you want to be tax deducted. Sorry, there are actually 200 questions. So some people are writing, please answer my question. Maybe if you type your question again, we can answer. But we try very hard to go through as much as possible. Does senior citizen have particular bonds for investment? There's no particular bond, sir. You can invest in any bond, but you can claim a 15G, 15H TDS exemption by submitting the form to the issuer. How do I count the periodicity of interest payment as per calendar or as per investment date? The periodicity of interest rate is defined at the time of issuance of the bond. So, आपके investment date से there is no correlation. Bonds can be 31st March, 30th June, irrespective of when you buy. They are actually determined when the issuance is there. If the rating goes southward, what is the plan of action? Dr. Shrimal, do you want to take that?
Neither you can answer that question, I think.
See, if the rating goes southward, you have to take a call, right? Because things move up and down. Thankfully, we have a credit rating agency who will get to, it is your perception, right? Rating, कोई double A से single होता है, doesn't mean it's going to straight away default. So it is your perception of what you think of that company. Speak to your friends, do some research, and then decide. Okay, I think we have come to an end now. Amir, there are still some questions, sir. Please join us for our next session. But Amir, over to you.
Sir, no need to say sorry because there is a very much interactive session from your end and your Dr. Kapil, because such kind of questions are very much enlightening for us also. As the topic suggests, jargons made simplified, because there are many misconceptions has been developed in the market with respect to the bonds. And as a common people, we should be aware what kind of jargons has been used, and that should be overcome the fear for the investment as well in the bonds. So nevertheless, never say sorry, sir, because there will be interactive session from your end also, and you are proactively answering all the questions. So that's create a very much impactful session for us. So on a formal note, that session will be extended, but on formal note, because of the time constraint, I just want to thank you and Kapil sir for taking this today's session and make our concepts clear. And being a layman and being in non-industry from the finance, I also personally come to know what kind of jargons can use in the market. So last but not the least, I would like to thank my audience for actually participating in the interactive session. So thank you, Kapil sir. Thank you, IndiaBonds team, and thank you, Vishal sir, especially for taking us time and taking the sessions. For more session, I will request all the audience to keep in checking IndiaBonds as well as our NISM website, so that we'll be keep in touch regularly on interval basis. Thank you so much. I would like to now formally want to close the session. Now we can hang up for the day.
Yes.
Thank
you,
you
sir.
to the
audience.
Thank you, Amir. Thank you.
Yeah. Thank you, everybody. Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.